Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium. LME 3-month copper. A higher but bearish black crow on Friday, and I am going to resist the temptation of calling it day 2 in a 2-day bearish meeting lines pattern, mainly because it just doesn't look right. The market is overall back within the broken bull channel, which is highlighted in dark blue on my daily chart. The question is still whether this move below back into this bull channel has mended the break above the upper bull channel line, currently at 91.13. The jury is still out on that one. What we do have is just below the broken late January downtrend, currently at 89.13, along with a 50% Fibonacci line of the 2022 move at 8900, and a little way below that the rising medium moving average, currently at 87.34. For the moment, the broken downtrend has acted last week as support, though I am prepared to retire it once it stops working, whereas the 50% Fibonacci line at 8900 looks a lot better as support. We still have overhead the primary target X in the 95.63 area, which was close enough to almost be reached in mid-January, and a secondary harder to reach target X1 in the 99.83 area. However, the construction of a rounded top over January has tempered the opportunity for such an immediate move higher. Yet I had also recently laid out the situation for this pattern to work. Well, we need to see a halt followed by a move up and through the previous highs of January if this is to be a bullish variation on the rounded top pattern. Thus, watch out for any build-up of bullish steam in the next few weeks. Over all of this is the realization that we had a monthly key reversal up in January, which has not as yet been realized, nor has it been abrogated. So far today, a dip to the broken downtrend, but the recovery to sit around where it has been for the last week and a half, around the slowly dipping short medium moving average, and that's currently at 89.87. LME 3-month aluminium. An unusual key reversal up pattern last Friday here, as it came after a bullish engulfing pattern. It was the highest close since the 1st of March and was capped, as it was earlier last week, by the slowly, very slowly ascending medium moving average, currently 24.35. This medium moving average is now being aided by the declining short medium moving average just above, and that's currently at 24.39. I still have on the daily chart the late October to last year to early January this year bullish shift pitch wall, despite it being breached and then broken. I have not highlighted it as I'm not secure in thinking it is a main pattern here, and I'll discuss why shortly, but first I will note the lower time for this pattern, currently at 23.75 as support on Friday and most of last week, as well as support from the flatlining long moving average below, and that's currently at 23.87. So why am I not secure in viewing the bullish shift pitchfork? Well, you see, there may be an alternative narrative to look at here. In fact, possibly two alternative narratives. So we have the bullish shift pitchfork, but what if the action since November last year, instead of being that, is part of actually a head and shoulders top? It may not even be a head and shoulders topping action, but a continuation head and shoulders pattern. If this is to be the case, then we are in the process of forming the second shoulder right now. This is a fairly obvious view, but there is something else less obvious here. What if the action since November last year develops into another larger diamond pattern? It seems far-fetched right now, and I grant you that, but I am trying to keep an open mind on this one. Either way, the top side seems fairly clear beyond the short medium moving average until we reach the congestion at 25.08, though prices did run into resistance in late February at 24.60 and again at 24.85. I'm more inclined to think that 24.85 area was more resistance from the short medium moving average when it was there at the time. But just watch out. Now, so far today, a slightly higher open before a dip to the long moving average and a sharp rejection back up to the medium moving average. Thus, these two moving averages have topped and tailed the market today. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.